What's good, YouTube? It's your boy K2 Analytics, and today I'm gonna show y'all boys how to trade during a recession. You know what I'm saying? We're gonna discuss the Fed rate hikes, the CPI, and the PPI. You know what I'm saying? But first thing first, let's discuss the Consumer Price Index. Okay, so the Consumer Price Index measures the monthly change in price by the consumers. The higher the CPI, the higher the inflation. So therefore, if inflation goes down, the markets normally go up. You know what I'm saying? But when inflation goes up, the markets will go down. That's why we're in a recession right now. You know what I'm saying? Now, the producer price index. This is sort of like the inverse of the consumer price index, but not quite all the way. The producer price index measures the price change from the opposite perspective. This is from the people that's going to sell to the consumers. So this refers to the price change of resources used to make the products sold to the consumers, like iron and gold, like stuff you use to make iPhone before they sell it. That is the producer price index. So when the producer price index increases, normally the consumer price index increases as well. Cause you know what I'm saying, if the gold goes up that you need to use to make the phone, of course the damn price gotta go up. So CPI and the PPI, that's how they correlate. Fed rate hikes, you know what I'm saying? This is what everybody want to know. This is how everybody need to know how to trade. All right, so the Fed rate hikes, those was discussed during the FOMC meetings. Normally like 8 of those a year. I think we had 8 of those this year. All right, so the Feds have to raise interest rates in order to cool down inflation. And the interest rates that they're raising, this is the ones for your mortgage, credit cards, car loan, and student loan debt if it ain't on hold. So, like, until they stop raising interest rates, the stock market, the crypto market will continue to fall because everybody has less money. You raising the interest rates for your credit card to like 8%, and it probably was at 2%. That means you just lost like 6% of your money. So of course everybody gonna have less money, so the market will continue to go down. So normally during the meetings, the volatility is increased extremely, and everything will go up or go down. But then during the meeting, it'll start to consolidate and reverse in a simple direction. Normally, most of the rate hikes and the CPI are already guessed on Twitter and the news. They already have it priced into the market. We already knew it was gonna go on, so there was no reason for the market to spike up, because we knew that inflation still is on the rise, interest rates are still on the rise. So goddamn, we knew the market was gonna go down. So in the most recent meeting on December 13th, let me show you what happened. Cause the price had drastically went up just to fall or all the way back down. Y'all can see right here. So what I did was I waited. When I seen that the price was going up, I was like, hold on, I'm gonna just let that bitch fly. You know what I'm saying? Because that's exactly what I did. I let it fly. And then I turned on my indicator to see how I wanted to trade. Because if you would have got in and just did your calls, you see your ass would have got burned. Because you see how oversold it is? It's oversold on the 1 hour RSI, stock RSI. Shoot, even the MACD is extremely oversold. This bitch all the way at the tippity top. So as I say, it spiked in one direction. It basically was like a big ass stop loss. Wanted to make sure it wanted to max out the RSI and the stock RSI and the MACD before doing a drastic fall. You know, I did my puts right here, made a good bit of money. And this is just one example. This was December 13th, the most recent trade. So, like I said, what you will want to do is during the meeting, everything's gonna go in one particular direction. Don't trade that. What you want to do is you want to wait for a little consolidation, wait for your candle patterns. However you trade, you want to wait. I say wait maybe 15 minutes or so. Then you want to look at your RSI, look at your MACD, your stock RSI, look at your indicators so you can see what direction you think it's finna go in. Because you know it's always a 50-50 chance. This particular meeting, it looked like it did the same thing. It spiked up just for it to go all the way down. But let's see how it looked like on other time frames. So this is the period of the rate hike. This is what happened. Click play. You see long. Okay. So as y'all can see, what happened was it gapped. It looked like it had a little gap up, and then like I said, it got stopped right here and it just began to fall drastically. So let's look at the indicator, see what happened here. Okay, You see how like the RSI doing like a straight line? That means that this is when they did the hike, because they normally have the hikes in the afternoon, but sometimes news is released like before the market even opens, like pre-market. So you see it had a huge gap up. It is oversold because on the RSI still at the top. So, but that's on the 1 minute. Let's see. On the other time frames, it's probably way oversold. Yeah, as you can see, this is probably when they had the meeting right here. See it gapped up right here, but this is probably around the time when they had the actual meeting. So it went straight up real quick. You know what I'm saying? Maxed out on the 15 minute, and you see it just fell. That shit just fell. You know what I'm saying? We keep playing it, that shit gonna keep falling. You know what I'm saying? Like I said, this is during the meeting. That would say you have to wait. See how it spiked all the way up, stopped, and just started falling. Another reason why I did that is because we are in a recession. They just scared to announce that we are. The way that they raising interest rates hikes and why everybody broke and unemployment going up, we're in a recession. They just not admitting it. Like I said, that's why I said you want to wait until you see your initial reaction. Like this right here is bearish as hell. Like as soon as I would have seen it match on a 15 minute, I did my put so I can make my money. So this was the meeting on September 21st to the 22nd. As you can see, you know what I'm saying, it was just going up. And then this candlestick pattern means that it was all the way down here, and then it pushed up. Like let me see. Let me go to the 15 minutes so I can show y'all. There you go. Let me show y'all. So this is the meeting right here. The 15-minute chart is one of the best charts to use to trade the FOMC meeting. Okay, as you can see, what happened was dramatic drop down, then another dramatic push up. Now this is what I mean by the volatility. You get stuck in the wrong direction, your ass is fucked. So I'm just gonna tell you straight up, you fucked. That's why you need to wait for a confirmation like this bearish candlestick and play the puts until that bitch fall. Like I said, now we're gonna look at some indicators and we're gonna see what happened. Look, all right, so this is what happened. You see, it was all the way for the RSI when the meeting, when the meeting was like done, or when it was going into the meeting, it fell drastically. You know what I'm saying? So the RSI all the way at the bottom. Now me personally, every time the RSI goes down this, I play calls, cause I know that shit gonna bounce up. So I would have played calls, got out right here on this candlestick. That's just me personally. You trade however you want to trade. That's just how I trade. But still, when it went up, you see how it went right back down. When I would have seen the candlestick, I would have put out, and I would have did some puts, because I know it's gonna go straight down. We're still in a recession either way. Don't trade until you see the confirmation. Cause like I said, during the meetings they get real volatile. You know what I'm saying? We don't know what direction they're gonna go to. The prices normally already punched in. Like we already knew about the 50 BPS rate hikes and the 75 BPS rate hikes. The Fed already announced they're gonna keep on raising interest rates going into 2023. So we are going to be in a recession. So when the meetings come up, guys, the best thing I can say is watch the meetings, look for price action, look for like what you want to do. You know what I'm saying? Then you want to look at the RSI. Check your RSI. My favorite RSI recommended, the 15-minute RSI for these meetings. Because like I said, these price moves are dramatic. Like they'll keep going in the same direction for hours, if not days, weeks. Like I said. But you know what I'm saying? It's your boy K2 Analytics, and I'm out of this bitch, man. Like and subscribe for sure.